All right, Bulls and Bears, we're back with another dose here. The last day of May 2025. Goodbye, May. Hello, June. What do we have in store, folks, for June and the summer and the rest of the year? Well, I think before the end of the year, we're going to see some life-changing transformations occur. Now, you could argue that these things have already occurred as we see record levels of consumer debt. We see all the broken promises with the promises that the cost of living was going to come down. We see prices still continue to climb, albeit at a slower level. So a lot of the people now are realizing that we're fed a line of BS and that things are just likely going to get harder for most people. Now, that's not for everybody. There's the top 10, 20% that are still doing really, really well. And in fact, when you look at the wealth building versus the wealth decrease versus the top 20% save versus the bottom 80%, top 20% are doing really good. They're getting wealthier and wealthier, and this is what we call the wealth transfer as people continue to work harder and harder to just get further behind while a certain group of people, the people at the top, people in certain industries, people close to the banking system and within the banking system do better than ever, right? So let's get into the details here. Let's show you what's happening. Consumers are being punished like never before. And we've got some numbers here to go over today. We've also got fresh warnings of a major meltdown when this market cracks. And there's talking about a specific market. A certain individual is giving us a warning. Not my warning. I've always said here, this could happen next week. It could happen next month. It could happen next year. There's no date on these market cracking type of things, which we'll talk about here in a few minutes. They predicted a market crack. We'll get into that here. But first, we know that imports just took a plunge. In fact, imports in the month of April were down about 20%. Now, remember, a lot of companies, when the tariffs were first announced, a lot of companies front-loaded their warehouses with goods made overseas. And we're still seeing those goods now being bought up. And I ordered some stuff from a company that used to always ship them from China. You've probably heard of Temu. And I ordered some stuff, and all the things that I ordered, every single one of them was shipped from a local warehouse. So even Temu and places like that, Amazon, loading up their warehouses with items made from overseas. How much do they load them up? How long will these items last? Will prices start going up later this year because those items are going to be bought up? We'll have to see how it plays out, but I think it's going to be at least a little while before we start seeing super rapid inflation. Right now, we're still seeing inflation, but it's not bad as it was previously. It's still cooling. Prices are still going up, but they're going up more slowly, so they're cooling. But I think later this summer and into the fall, prices are going to start shooting back up. But we also have some deflationary forces. We have a lot of people leaving the United States. That's very deflationary. And we're seeing that in rents. Rents have dropped now for the third consecutive year, not by very much, but they have dropped. That's two main things that are causing that. I think the people leaving the country, but two, people so loaded up on debt, they can no longer afford the high monthly rents like they were able to previously. Now, they're still high, but they're much less able to afford those rents now with the current debt levels. Also, something else that could contribute to the deflationary side of things, and that's tens of millions of students now getting their credit scores really banged up because they're late on their payments. And remember, this was a transformation a few years ago. It was a pause where the students didn't have to make any payment. And then there was all these promises of forgiveness. Remember, they talked about forgiving all the student loans and they're going to wipe it out. So people, of course, didn't want to pay back their loans. Even during the pause, some people still wanted to pay down their balances because they thought that at some point they're going to have to repay them. Right? That's what people expected. So some people still paid down their loans, but most people didn't because they couldn't for the most part. But then there was the new administration that came in and said, not only are you going to have to repay your loans again, we're going to actually count your late payments now against your credit, and it's going to really ding your credit file. So your credit scores are dropping. That's tens of millions of people that now are not going to be able to qualify for car loans, mortgages that they probably couldn't afford anyway because the prices are just too high for most people. But more people now not qualifying for these loans. So that could be deflationary. It depends on how the banks react to this. So the banks could just turn a blind eye and still give out these loans like they were previously and not have any tightening of the lending, or they could actually loosen the lending to allow lower credit scores and lower down payments, all those things. It's going to be dictated, folks, by the banks and the way money's loaned out. And, sometimes I'll get asked, why do you keep coming back to this? Why do you keep talking about inflation versus deflation? Because so many people, the question I get the most is, when are the bubbles going to burst? The housing bubble, the automobile prices are in a bubble, the cost of living bubble. And the scary part to most people is these things should have busted many years ago. When home prices got above where they were at the peak of the 2007, 2008 housing bubble, things should have came down. They should have come crashing down, because that should have been a not just a red flag, but also an awakening moment that back then it was called a housing bubble. People called it the housing bubble. Now you really don't see that term as much, because people have just gotten used to home prices being so outrageous. Even though back then we called it a housing bubble before home prices came down. I lived through it. I was actually waiting for the bubbles to pop, and I was able to buy real estate in 2010. So it's fresh in my memory still, even though that was many years ago. Fresh in my memory how insane prices were back then, and now they're even more insane. But it's been this way for so long, people have accepted this as the new normal. And they even came out with the recent study here that actually backs that up here. They put it over at USA Today. Sticker shock, Americans are learning to live with inflation. That's because people have accepted it as the new normal. So it's no longer, our prices going to come down? Is the bubble going to pop? People are now convinced that this isn't a bubble, that this is just a permanent high cost of living, a plateau, that we're never going to go back to the old way. It's just up and away forever. People have gotten used to that, right? And we talked in our previous report about how people are just losing hope on ever really owning much. They're just spending money on entertainment items and eating out and coffees and concerts and ball games and stuff like that, travel, vacations, because they feel like they're never really going to own anything. So they might as well just enjoy their life. You might as well take that vacation. You might as well have those 2 to 3 Starbucks a day and a $5 latte and all that stuff here. But as they put it over here, USA Today, sticker shock, Americans are learning to live with inflation. It's the new normal now. People feel like it's never going to change, never going to go back. So are they correct, or are we going to see something big pop off this year as, again, tens of millions of consumers are really going to be struggling? They're already struggling. The fact that they can't repay their loans. People say, when's it going to happen? When's it going to happen? Folks, it's already happening now. It's happening as we speak. It's been happening. Tens of millions of people can't make their payments. Why do you think we had to have the payment pause on these loans and all the things that we saw over the past few years here? All right, but let's move on here to this prediction. It's our good friend, Mr. Jamie Dimon. He's out there again, Mr. Jamie Dimon. Government spending will cause a crisis in the bond market. And the long and short of it is, folks, when countries no longer trust the U.S. and the dollar, they're going to stop buying this U.S. debt. And on top of that, in addition to stop buying it, they're going to dump the U.S. debt. And that could cause a rapid spike in interest rates, mortgage rates, and it could really change things in a hurry. People thought that when mortgage rates got around 7%, that the housing bubble was going to go bust, folks. There's so many different ways that people are skating by right now with buy now, pay later, living on borrowed money, all the forgiveness programs. There's so many different ways that they're keeping these bubbles inflated right now. It's going to take a lot more than 7% mortgage rates to bring the markets down. I'm thinking it's going to have to be 10% plus, which people think it's impossible. But if we see a bond market implode, that's definitely likely, even 15%, 20%, like we saw back in the 80s. All right. So Jamie Dimon, he's been making these predictions for a while. Take it with a grain of salt. Take it for what you will. I've always said here, always be ready for something bad to pop off. Have some cash if you can. Now, there's people that I hear from that don't have any cash. They just don't have any extra money at the end of the month to put away. I try to keep just as much cash out of investments as I have in investments. That way, if there is a deflationary crash in the stock market, what have you, you'll have some money to go and put in at the bottom as prices crash. There's nothing worse than seeing amazing investment opportunities, whether it be the stock market, the housing market, whatever it is you invest in, maybe it's crypto. There's nothing worse than having no money when the markets come down, especially when you paid bubble prices for whatever it is. Imagine buying a home at the peak of the housing market, and then the housing market goes bust. You've lost your equity, and on top of that, you have no money to go now buy real estate at sale prices, right? That's a very, very bad feeling as an investor. Not even as an investor, just as a person trying to get by. That's not a good feeling at all. And did you guys see about what just happened here or read about? The Fed Bank of New York came out and said now that just recently 2.2 newly delinquent student loan borrowers' credit scores plunged more than 100 points, and more than 1 million others had their credit scores plunged by 150 points, right? And this is just a couple months after they re-implemented these student loan programs where people are going to have to repay these loans, and they're going to get their credit scores dinged with these delinquencies. We're just getting started on this, folks. By next year, we could see 10, 20 million people with tanked credit scores, and that's going to be definitely felt throughout the economy. Maybe in a good way. Maybe it'll bring prices down. When less people can borrow money, and again, it's up to the banks if they're going to loan money to these people or not, but when less people can borrow money, that's when prices start coming down. If you're somebody with cash, somebody waiting for the bubble to bust, waiting for things to go on sale, it could be a good thing. People say I'm doom and gloom, but maybe you don't have any money. If you don't have any money, then prices crash and you can't buy anything anyway, so what's it matter? So that's a doom and gloom thing if you don't have any money to invest. And a lot of people don't. People are just barely scraping by. I hear from people all the time. I have clients all the time telling me they don't have any extra money. How can they invest if they don't have extra money, right? So if you think that investing is the key, and I think it's very important, then you need to cut back your lifestyle and maybe stop spending money on those things you don't have to spend it on and have cash available for that investment opportunity, right? But then I hear this argument. I hear this all the time. I hear, well, JJ, prices are just going to go up. It's never going to come down. So why save money? There's not going to be any crash. There's not going to be anything going on sale because prices are just going to go up. They're always going to keep these bubbles inflated. Inflation is going to continue nonstop. It may slow down a few months, but it's just going to go up and up and up. I hear that too, and I could see people's skepticism on if there's going to be any sort of bursting of the bubble or any sort of deflation. Well, time's going to tell, and I think there's actually going to be some big deflationary things happening, but you never know. If the bond market implodes, prices could spike. Rates could spike, which would then have the cost of living come down, but then there could be stagflation too. We also had recent warnings of stagflation. So the point is, nobody knows exactly. Be ready for everything and anything. All right, let's move on here. And I wanted to get into this article out of Redfin, some information here that I think is very relevant to what we look at here. New apartments are sitting vacant for months, giving renters power to negotiate concessions. So rents are coming down, and I think the decrease in the drop in these rents is going to accelerate. And in fact, here's how Redfin put it. 49% of newly built apartments completed in the fourth quarter of 2024 were rented within 3 months, the fifth consecutive quarter with an absorption rate below 50%. New apartments are being completed at near record levels, with the increase in supply keeping rents down, providing renters with more opportunities to negotiate concessions. Larger 3-bedroom apartments are renting out slightly faster than other types. That's because a lot of people are working from home now. A lot of people want that extra bedroom. So 3 and 4 bedrooms are still getting scooped up fairly quickly. But the 1 and 2 bedrooms, those are the ones coming down faster and sitting on the market longer. So less than half of newly built apartments are rented within 3 months. And this is up. And I'm bringing up a chart here. Let me bring up a bigger one here. This is up. It was actually a lot lower here just 10 years ago. It was second quarter 15 years ago now. 13 years ago. Take a look here. All right, so new construction, definitely the highest it's been. Dropped a little bit from the third quarter to the fourth quarter. The absorption rate, though, that actually went up in 2021 was about over 70%. And 70% meaning 7 out of 10 apartments were scooped up in less than 3 months. Now it's only 49% of apartments scooped up in less than 3 months. I think we're going to see that drop even more as things continue to unfold here. And of course, we're going to keep an eye on all that for you. Please let me know what you think about this down in comments. Jamie Dimon with another prediction, saying the bond market's going to send shockwaves. He said in another article, I don't think I actually brought this up here. In another article, he came out and said the following. And he says, it's going to happen. Warns of a crack in the bond market. U.S. fiscal mess. Bond market will crack under pressure from rising debt. And also loss of trust in the dollar here. You're going to panic, is what he said. You are going to panic. So are we going to panic? What's going on, people? Please let me know down in the comments. Thanks for being here. Goodbye, May. Hello, June. I will see you on the other side. We'll see you in June, everybody. Keep stacking. Bye for now. Peace.